Good evening, everybody. Happy Sunday. It is a beautiful July the 17th here in Toronto. The markets last week finished off strong. It is going to be a very interesting week as the money printing system comes online in Europe this week. Let's talk about it. I'm your wealth guy. Let's talk money. Let's talk Sunday market preview. All right, everybody. So welcome to the channel. I really hope you like what we have to say today. Today's video is going to be, again, a continuation of what we've already been talking about quite significantly. We did a little bit of a video on that. Actually, it was a bit of a long video on that on Wednesday. But it's essentially the actions of the European Central Bank. But first, let's take a look at last week, because on Friday, what an amazing run-up. 600 points plus on the Dow. We pulled the S&P out of bear territory by about 10 points. Nothing significant, but still out of bear territory. I think that possibility may continue, where we're going to see some more positive momentum here, artificially, of course. And this is why. So last week, Friday, the European Central Bank announced that they are ready to deploy their emergency tools. And essentially, these tools will be used for bond purchases at an unlimited amount. Just saying unlimited should help you understand how hyperinflationary this will be. And it doesn't matter what people can say about selling of bonds. It's really the amount of buying that is going to push it higher. Listen, at the end of the day, the Fed or the central bank, the European Central Bank, has already said they are going to print as much as necessary to prop up this bond market. This is official. This is official. If you actually look it up, it was on Bloomberg on the 15th. Here is a quote from the article on how serious this is. So nearly 2/3 of economists surveyed predicted the ECB, which is the European Central Bank, will eventually have to use this instrument. They already have, and they will continue to do so. Almost 90% expect it to be unlimited in size. Unlimited in size. That is directly from Bloomberg. So expect inflation to continue to run to the upside. If you think this is not coming to our shores, I don't know what to tell you, because Powell has already been to Europe immediately following the interest rate hike. The European Central Bank also came out then and said that they have to come up with emergency measures or emergency tools to prevent the defragmentation of the bond market or the debt market. Powell was out there, I believe, the following Monday or Tuesday. You don't think that that's already here? It's already here. We know it is. See, quantitative tightening has never really happened. And eventually we're going to have to pivot. The Fed will have to pivot. You see, fighting inflation at this point is absolutely futile. It's not going to happen. I don't believe there's a genuine interest in the Federal Reserve or central banks to actually curb inflation at this point. Even though Canada raised their interest rates last week by 1%, it is not going to do anything to inflation. Even though retail numbers looked good initially, just understanding that retail numbers can increase just on inflation alone, because it is a dollar calculation, not a units moved calculation. So we've not actually seen an increase in the number of units being sold on the retail level. No, we have seen an increase in dollars used, meaning people are paying more for an item. But somehow that became good news, and the markets, in addition to the ECB, in addition to something that one of the Fed representatives said on Friday, which seemed a little bit less hawkish, suggesting that maybe 50-point increases might be a possibility coming down the road. But the truth of the matter is, even if it's 75 basis points, even if it's 1%, even zero, go into negatives. It doesn't make a difference at this point. anything they're doing now for inflation is really just an attempt to try to boost a little more interest rate here so that they can try to reverse and drop interest rates when they switch focus or pivot away from inflation to recession talks. At the end of the day, if you watch my video on Wednesday, I talked about how this is really the 11th hour for the Fed. And we are very much witnessing the end or close to the end here of a lot of fundamentals as far as the currency is concerned, as far as the economy is concerned, as far as the eventual implosion of the debt market, as far as the eventual implosion of the equities market, where unfortunately many people are going to be hurt. Now, if we take a look at this week coming, I do feel that the markets will move to the upside. And we might see some continued momentum here from this positive news, especially if one of the other central banks, if the Fed comes out, for example, and says that we may actually see them printing more officially, even though if we look at their books, they are still printing. We may continue to see a little bit of upside momentum, but I've been saying this for a while. I am expecting a short-term pop in the market to the upside. I am, but I think it would be very short-lived. I think it's only a matter of time before this dead cat loses momentum, this bounce ends, and we return right back down. In fact, we haven't really moved up, even though, yes, I mentioned the S&P is out of bear territory, and the markets this evening here in very, very early trading sessions, the futures are looking very flat. I really do see there's that possibility of some positive momentum, but I don't think it's going to be long-lived at all. Very, very short-lived. I do feel that by mid-fall, the pivot will happen. I think by mid-fall, we'll start to see a lot of the cracks really showing and actually bursting at the seams at that point. And hopefully I can keep you on the right side of that. But for the most part, I think going forward, caution is where I am. I am not trying to buy into an upwards moving market, even if it looks very favorable, because like I said, I don't have faith nor confidence in this market. I know inflation numbers when they come out. Again, I was shocked at 9.1. I expected a 9. Markets expected an 8.8. I wouldn't be surprised if 10 is the next number that we see with the US CPI. Let's see what the interest rate numbers will be, because no matter what happens, that will eventually move the markets. We'll see what follows as far as announcements are concerned and then commentary, but that's later on. This week, again, earnings continue. Let's watch for earnings, as that will impact the market, at least at the level of the Dow, maybe not so much the S&P. Tech will obviously be a major variable here. Keep an eye out, because we do have some major players being or reporting their numbers. But otherwise, that's it, everybody. I will follow up later this week with some additional information here on the central bank, but I did want to get it out there. Money printing is going to be official and unlimited in scale starting this week. All right, everybody, enjoy your evening. If you like the video, please hit the like, subscribe, share, but most importantly, comment. I would really love to hear what you have to say as far as where the ECB will go, whether or not this is hyperinflationary, and if you think the markets will be moving to the upside at all. I will see you tomorrow morning at the opening bell.